This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I am also the trader behind the Trade Spotlight advisory service. My advisory service is three segments, all under one advisory. I am covering commodity futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that will spotlight two or three markets that may become trading opportunities for this week. This week beginning with Monday, August 22nd, 2022. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's jump right into the charts. Busy week here. There are another three markets that I didn't even list for this video that I have interest in. That's the E-mini S&P, Euro FX, and Japanese yen. But this first chart is of the December 22 December corn. You can see I have a large pennant formation drawn off, not an even pennant, but a pennant nonetheless with the higher lows and lower highs. Though I'm not fond of this big gap here on the chart, would have loved to see another touch or two, but you can see the market failed to get past this 50% mark. This is a Fibonacci retracement from this high down to this low and this sell-off that we experienced in July. But what I do like here is that the market is approaching this upper trend line and a couple moving averages. You have your 20-day, you have your 50-day moving average right here, this blue line, and this darker line is the 200-day moving average. Looks like that's about to cross over. You also have your 20-day moving average acting as a support level below the market. My trend indicator is bullish, and my momentum indicator showing upside momentum. That's evident of the last three trading sessions and this big breakout here today. So I'd be looking for a close above this trend line to get long this market, and then look to see if we can clear that 50% Fibonacci retracement. Then there's a lot of room up to this high, or the 12-month contract high that comes in about 760, a little bit over actually. The high, I'll get you the exact price, was 766 and a quarter from May 16th. Stop loss probably below this lower trend line here, maybe even below the $6 mark. So, you may be taking on 30 cents, 40 cents of risk. If you're not comfortable with that, you could look at the 20-day moving average, which is 614 and 3/8. So something like 614 and a quarter, or 614, 613 and 3/4. But I do want to see, again, the market close above this upper trend line, this 200-day moving average, and this 50-day moving average. And then I believe we can see some continuing upside with this strong momentum. Next chart is the November 22 soybean contract, and very similar to corn. Uh, in fact, basically everything I said for corn matches right up with the soybeans. This big pennant formation, this gap here on the pennant where I would have loved to see a couple more points. Same with the lower trend line acting as a support level. You've got those moving averages converging. The momentum is up. The trend is up, though this one's a little bit more towards the neutral side. But just another contract that we could potentially get long, or maybe even call options in this contract. We can even roll out to the January 23 options to get long, because you can see soybeans have bigger ranges than the corn market, so you would be taking on considerably more risk. For example, this lower trend line, that's where I'd be looking for a close above. It's about 1450, and then this lower trend line, you're below the 1390, so 60 cents, $3,000. That's a lot of risk to take on. There is a mini contract we can trade, or again, just outright calls or call spreads to trade soybeans. But I like going into the fall here, getting long the corn and getting long the soybeans. The third chart is staying with the grains. It's December 22 Chicago wheat. Here I have a range drawn off, this rectangle here. The market has consolidated between about the 850 and 750 range. We actually just put in a new contract low last week, so that made me draw out this rectangle a little bit more. But I'm looking for the contract to get back up to the top of this rectangle and break out, again, like getting long the grains going into the fall. Um, this one, though, has a little bit of work to do. So I just wanted to get it on the radar. I am liking that the trend is about to turn, momentum starting to pick up in this market. So let's just keep Chicago wheat on our radar as we move forward here. So because that one's not quite ready, I put up a bonus. So we got 4 charts to look at for today. This is December 22 live cattle. And we sort of have like a double top formation with this high that is put in here recently last week. Let me get that price for you. And then as well as a 12-month contract high. So that high from last week was the 17th, 151.77 half. And if you go back here, the 12-month contract high that was made on the 22nd of April, 152.37 half. Then I got this lower trend line here, the sharp lower trend line with multiple touches. I'm looking for a close below that trend line. You can see today, this is after the market's closed today on Monday. The market actually closed above that trend line, so not quite ready. I might be looking at put options in this market instead of straight up shorting futures. Again, because of the volatility in this particular market, you can see there's some big trading ranges that we've experienced this summer. That's typical of summer trading. Um, Lighter trading volumes, bigger trading ranges potentially, but not as not many trends or trending markets. But now again, we're getting into the fall. We're going to start to see that open up a little bit, some more trends, some more follow through on those trends. Right now, you can see the trend is still slightly bullish, but looking to turn over. Momentum is already turning down in this market. So we close below that trend line. We'll look to put on a put option, or you could potentially look at shorting futures in this market. Here's a look at what the Trade Spotlight advisory service looks like. This is the futures segment. You'll know in the top left-hand corner which segment it is. You'll get a write-up of the trade, uh, the precise entry, exit orders, so you know the risk-reward parameters. You're very welcome to tweak it to fit your own trading style. Any important information like margins, and then a chart that you can expand to view my markings. If you're not following the Trade Spotlight, I encourage you to do so. It's a free resource. Just go to danielstrading.com. Under advisories, click on technical analysis and select Trade Spotlight. You can read more, see recent posts, and click the orange button to subscribe. If you have any questions on any of the markets I covered today, or just the markets or trading in general, reach out to me. Here are all my numbers and email address. Thank you for taking the time to watch and listen, and happy trading this week.